Right, good morning. This is Jack from Charting the Markets, and this is a pre-market webinar for the morning of Wednesday, the 9th of April. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right. Okay, yes, we've basically tariffs on China are actually to 104% plus 20, so that's 124% now. China has increased tariffs on the US, I think, up to 84%. So we're on full trade war with China now. Obviously, this has had a rather bad reaction on the futures. Now, I'm really hoping, I was writing it about in my post yesterday, I'm really hoping to get a decent bounce here that lasts at least a couple of weeks. That might be hard in this news environment. But if we go down, if we get that, then we have a really good roadmap that we can be working with for the next 6 months to a year or so. If we go down, then we're going to, well, it's going to get tougher. So we could obviously go down, but at the moment we've not made any new lower lows on ES. We have made lower lows on RTY, I think, but there's still a very real possibility we're setting up a double bottom and that we're going to do a rally. Got to say the news flow isn't particularly promising. But I'm watching for that. It is very possible, obviously, we are going to break down. And if we break down, then we're moving out of the scenario that I was talking about yesterday, which would be a damn shame from a trading point of view. But at that stage, it gets tougher. We'll still have stuff to work with, but it gets tougher. All right, NQ, almost back at the low retest. RTY. RTY, we've already done the full low retest here. We've got some nice looking potential double bottoms here. Are they going to deliver? Don't know. And we're almost at the retest of the low on YM. On DAX, we've still got a 60-minute buy signal fix, and we may be retesting the low there too, and ESTX the same. So waiting to see what the reaction will be. I got to say, I've been having a careful look at the news for overnight, and it's not particularly promising, but it may be that we're going to see that rally anyway, or equally, we may not. All right, let's have a look at the bigger picture charts. And on ES, no current divergence here, obviously. We're looking very oversold on the RSI 5 and RSI 14. We've obviously gone through we've made all the targets from the initial highs, and we've gone through the possible support trend lines, which is fine, because actually, if we're forming a head and shoulders, then that's great. If not, then it gets tougher to chart this in terms of resistance trend lines and support trend lines. Not to say it isn't doable, but it gets significantly tougher. So I'm still hoping for that bounce. We will see. All right, and the daily chart looks the same. The RSI 5 is now the most oversold that we've seen on this chart, which goes back to 2023. And if we look at the other daily chart I've got, which goes back to 2021, that is still the case. We actually had a similar thing in the technical bear market in 2022. But did that go up straight away? No, it didn't. We saw a little rally, a retest, no positive divergence, and then a move up. We will see how this one goes. In terms of if we see a rally, I'm wondering about possibly a test of the daily middle band, and actually that's where we fell yesterday. And obviously that is the obvious place to fail. So did we fail there? No, we didn't. Get back there. Sorry, no, it looked as though we had on the other. I've got that at 55.50. And that would be the very obvious target if we could make it, although that would be a little high for the head and shoulders here. But the fact is, ideally, a head and shoulders gets up to the ideal target that I posted on all of these yesterday. But if it goes a little higher, it doesn't matter. And the main thing is that it lasts 2 weeks, because it really just needs to show up properly on the daily chart, which at the moment it's marginal. We've got up to the right kind of area, but it's a marginal in terms of whether it could be a right shoulder high for a head and shoulders. Very much the same picture on the Qs. Very much the same picture on Dia. Different picture on IWM. This is why I didn't mention it in the post yesterday, because we don't have a possible head and shoulders forming here. We don't need one though, because we do have a possible double top here, and it's a big one. A sustained break below 157 would be looking for a target a long way lower, so low that I don't think there's a realistic prospect of us making it. But keeping an eye on that. But the thing is, quite often you get a pattern like this, which is really oversized, and it rarely makes target, but it quite often breaks down. And I'd be wondering about a possible test of this rising support trend line, which I've got in about the 116 area. All right, let's have a look at DAX. DAX is looking pretty grim. No possible head and shoulders option there, really. And Nikkei, again, looking pretty grim. We're trying to rally here. I'm wondering if the rally can make it through this news flow. But maybe we'll get it and maybe we won't. Okay, let's have a look at DX. DX has been rallying a bit here. I'm leaning towards the downside, and I've got a firm target in the 96 to 97 area, and that's not going to be helped by the actions that Trump is taking in terms of the eliminating the trade deficits and so on and so forth. Make it rather unlikely that the US dollar is going to be able to remain the main reserve currency. That's going to send the dollar down. That's also going to have an interesting effect on bonds. Now here, I just want to switch over to the TNX chart because what's happened this morning is very interesting. We had this head and shoulders here, and I was wondering if we could see a big decline here to the 32-33 area on the basis of what I was looking at on this head and shoulders. But this morning, the head and shoulders failed. We've seen a big decline in the dollar, in ZB over the last couple of days. This is an inverted head and shoulders. It's broken up and it's got a target up at about the 47 area. I think we're going back to 48.09, and that puts us back on track for, hang on, wait a second. If you look at this thing here, this actually really, it's a bit oversized, but it's a bull flag. And this is, let's just see if I can get a trend line here, but this is basically a very nice falling megaphone that's just broken up. This head and shoulders has just failed with the move over the right shoulder, and the next obvious target is the main. With this, I'm not certain this is flag resistance now, because this is all based on the idea we might get down to 34.33. I don't think that's likely to happen now. I think we're likely going back up to 48.09 and then 49.97, and then we've got a big inflection point there. What's the potential move here overall? Well, it's possible that we're forming the right shoulder on an inverted head and shoulders here, and if we see a break up over the 50 area, then we could actually see a move which takes us up a long way, up to 8 or 9%. And this brings me something back to what I was saying in November last year. I was saying there might well be a bond market crisis this year, and I'm still thinking that. And the reason is that the new U.S. administration is not making any noises, which is making it look as though debt is going to be going down in the US, and if debt's not going down in the US and there's no real plan for getting debt down in the US, then that's the point at which people holding their bonds tend to wonder whether they're going to get their money back. If the US dollar is losing its reserve currency status, which is likely to, I think, over the next couple of years, then of course, mainly people hold their US currency in bonds. So that's why something like 25% of all of the 28 trillion of US treasuries that are outstanding are held abroad. And if obviously the US loses its reserve currency status, much of that will be sold. And also it might be sold as part of retaliation to tariffs. That could send up bonds a long way. No one can remember interest rates of over 5% really, but I think they may be coming back. We'll see how that goes. It's a fluid situation, but that's something I've been talking about for a year or two as a possibility, and I think we might be about to go and see how that goes. So we will see. All right, great. In that case, let's have a look at CL. Now, CL has broken down. I did say I was looking for the retest of 63.57, and I said when we got there, we'd have an inflection point. That could be a double bottom, or we could break down. And then last week, I was saying that under the current circumstances, I was leaning towards a breakdown. This is a breakdown. We've got down to 55. The double bottom that had set up is more or less dead. We've got a 60-minute buy signal fixed here, but we reached 55 overnight, and this is an expectation that the economy will be slowing a lot because, of course, that doesn't do anything for oil, it doesn't do anything for lumber, it doesn't do anything for copper, and prices have come down quite a bit, and I think I'm leaning towards seeing a rally here, but after that, I'm seeing this go down. On the good side, this does mean this might bring an early end to the war in Ukraine because Russia is mainly paying for all of its costs of the war with oil. And if oil prices go down enough, that may actually tip them over the edge. NG, we've got a very nice looking falling wedge here, and this could still be a flag, but I think we might be breaking down from it, and it might be that my beautiful double bottom with a lovely Fibonacci target in the 5.75 area, it might be failing. And this is likely due to looking at the slowing down of economic activity. That's not great for natural gas either. We will see. But at the moment, this is starting to look like a breakdown. I'll be looking at more about this on the daily chart tonight. GC, we've got a little double bottom here, and it's starting to break up. If it succeeds, then this will see the high in the 3200 area retested. SI, rally here, could be forming an overall bear flag. HG, possible double bottom here. I think the prospects for HG over the next year or two are grim. And I was saying this when we were making these highs. I was saying, the economic activity was likely to decline. That would be very unkind to copper. And we've got a beautiful large double top suggesting this is going to go down a lot further. We'll see how that goes. Currencies, not a lot to say really. I've got more to say about these on the daily chart, but I'll be going through those on the bigger picture tonight. But everything really is suggesting that the dollar is going to go down. Everything else against it is going to go up. KC, I drew in this ideal bull flag support trend line yesterday, and we've perfectly hit it. This may complete the formation of the bull flag on coffee. Obviously, there's always a chance it breaks down, but at the moment, this is looking very, very nice. I've been talking about this move down to here to form this flag for weeks, and this is looking very nice. You've got a possible 60-minute buy signal brewing, and I'm skeptical that tariffs are going to have a big downward impact on the coffee price. We shall see. Sugar, we've got a nice looking flag here, but we might be breaking down from it, and this is also a potential little double top. We'll see how that goes, but if we get down below about the 1760 area and we hold below it, then we're probably heading back into the 1615 area or lower. Looking at CC, we retested the low here. This could be a double bottom, waiting to see. Bit of positive divergence here, we shall see. On ZW, this is looking like a bear flag forming, setting up a retest of this low. On corn, this could be a bear flag too, not as nice, and we've gone through the obvious trend line which I'd drawn for it. This could be a double bottom as well. So as the wheat one could be as well, but wheat isn't going up. Corn is still actually heading towards the upside. On soy, this couldn't be a double bottom really. It could be a part formed IHS. Soy obviously is particularly affected by Chinese tariffs, so this may continue to be depressed. CT, got a nice looking double bottom here after this low retest, and I'm thinking that might deliver. 60-minute sell signal fixed in the short term, almost made the possible near miss target. On lumber, I'm leaning lower. I've got a double top set up on the big picture chart. On live cattle, we've got a double bottom target down here at about the 191.3 area. We haven't made it yet. Possible 60-minute buy signal brewing, but I'm leaning towards it making this target. We shall see. And on lean hogs, we've got potential level bottom here. No current positive divergence on the hourly chart. Waiting to see if we're going to see a rally. Okay, great. Let's have a look at questions. Wait a second. Yep. Okay. All right. No questions. Right. The key thing is, can we hold the lows? If the lows break, with force today, then we lose the setup that I did yesterday, and I'll be very sad about that because it'll be a lovely setup to trade over the next few months. I'm still hoping a rally might get delivered. We haven't started all full-scale trade war with Europe yet, and I think it might take 2 or 3 weeks for that to settle down into what probably will be a trade war. But I think hope might keep us up in the meantime. I'm looking for these lows to hold. I'm looking for potential level bottoms to form here and then deliver a larger rally. If it breaks down hard, then that's all over. I think on ES, if we get down really below the 4650 area, then we're probably going straight to 4100. I'm hoping that doesn't happen, that we can hold over 4750, but we will have to see. Only one way to find out whether that happens. That's to wait and live through it. We shall see. All right, my pleasure as always, guys. I will see you tomorrow morning.